Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's January the 8th. This will be our chart lesson for today, and a really nice spiking channel. And this is what a true spiking channel looks like. We talked about it yesterday. We had the makings of what looked like one, along with another possible channel. But there's no doubt today this is a true spiking channel. This is what they look like. Prices spike up. And look how strong that move is. It's just super strong, but prices can't maintain that. That's just too fast, too far, and too strong. So they kind of uh, level out a little bit and go into a channel usually, and that's a clear spiking channel. So study this. This is what they look like, and you can see them to the downside. Same thing. It'll spike down and then go into a channel. And a good trend is a healthy trend is about 45-degree angle. And so you want to see those 45-degree angles if you're looking at a really good trend. And you can see we finally got the break, moved to a new high, and now we're correcting. And I mean, that's perfect price action rule. So we've had some really good trading days the last few since the new year started. So I hope it just continues this way because it's just been really, really good. And, um, a good chance to make some money. I came in actually a little bit late this morning. I wasn't here as early as I normally am. And so I got started a little bit late, and I was still done before 9 o'clock today. And people ask me that all the time. If it's a good, strong trend like this, should I keep trading or should I hit my target and quit? Well, that's a hard one to answer. Sometimes I'll keep trading. At the very least, I may manage a runner if I've got a runner going and want to see if I can get more out of it. Because you can catch runners on days like this, and they can go for a long time. I will usually exit it, the measured moves and things like that, just to play it safe. But it's all relevant to your personality and how you like to trade and what you feel comfortable doing. But you hate to stop trading early on a day like this because you don't get a lot of days like this. So when you get one, if you want to take advantage of it, myself, I usually just quit unless I'm managing a runner or something. So today I just quit, and I had some, I've got some other things going on, so I went and took care of that, and I'm back at it's a little bit before 3 right now. Get this over with, and my day's done for the day, and I can concentrate on myself, time for myself, for my family, or to take care of other business or whatever. So it's not about trading all day long, but if you're doing well and you don't want to stop, nobody's not me to tell you that stop. So that's just a tough question to answer. But me personally, I like to hit my target and stop, but I don't always do that. It just depends on what's going on and how much I want to trade and how I'm feeling about it. But that's just my opinion on it. So I do think on most days you're better off to hit your target and stop because it's amazing how many times you hit your target and you say, well, I'm gonna get one more, and next thing you know you've given it half of it back, or worse than that, you've given all of it back or more, and you end up with a losing day when if you just stopped you'd have had your target. I've done that myself before. So but let's back out and talk about the trades. Make it a little bigger so it's easier to see. But there was a great chance to get in here earlier. When I came in, we were right in here. We were just getting the break of this little correction. Notice that channel, and prices are fitting real well. And one of the clues that you might get a break to the upside here is notice how we overshot it to the downside. So when it comes back, you get your break here, a new high, and then a move to a new low. And guess where it bounces? Right off the trend line, and off it goes again. And this in the afternoon, this is a little bit flatter than I originally had it drawn, a little steeper than this. But as we got more price action, um, I leveled it out a little bit more. I moved this down some. My channel is not quite as steep as it was originally this morning, but once you get more price action, you can better judge what's going on. And turned out to be right when I flattened it out a little bit. You can see we turned down right off that line later in the afternoon, and we bounced right off the lower line later in the morning, I should say. Feels like afternoon because it moves so nicely. But when you see all these little bars that are dojis and got lots of stems and just looks real choppy, but it just keeps going higher and higher. It doesn't look like it, but that is a strong, strong trend. So when you see those, don't let them fool you. They're strong trends, and get on it and hang on as long as you can and play it. Don't don't gamble with it, but try to get what you can out of it, and then move on to the next trade. But anyway, let's talk about the trades again. There was a nice second entry here. You had your break of your channel on this kind of first entry. It pulls back. There's actually one tick higher there, but I don't really consider that a second entry. Look at all the bars stacked up in the dojis, and you're looking for the new low, and you're really looking for prices to come back to this trend line before they bounce anyway. And you weren't there yet with this one, so um, it actually broke lower here first and turned and went out the upside. Just have a stop waiting there. Normally that will take off pretty quickly. It took a little bit of doings here before it finally took off, but it did. And then you get a little pullback and you get a second entry right there. It's like a little breakout pullback long from this little congestion area here. And it comes back and then it pulls back again. So now if it turns back up, you got a failed second entry short, and that's where you really like to enter. But with all those dojis, you might have waited for this bar. But if you didn't enter here when you saw this bar, definitely go long above it, or let it break higher and drop a limit order. But most of the times you'll miss these trades by doing that. But it did pull back one more time. So if you weren't on yet, this is a great place to add on, or a great place to go ahead and enter, because it's just another breakout pullback long, really. And it's like a little double test. Notice that's the first test of the EMA right there. When it got above it, then it gave it that little double test. And usually prices will move on, and that's what happened. It took on off from there. And any runners, you could have caught runners on these. And there's actually one more little pullback right there. But you're getting into this midline here, and it's kind of holding, and you've already come off the top to the bottom, so there's a good chance you just stay in this side. So I didn't like that one quite as much. You still could make the same argument here, but I like the little double test rule and the breakout pullback. But you could have entered there. It did go lower and then break out the high side, so you could have entered there if you wanted. In fact, I'll go ahead and just circle it green, because there's probably some of you that recognize what was going on and you just went with it there. You're not back to the high yet. You haven't had a break of the trend line yet. So I mean, there's a good chance that this thing shoots a straight up here to the high, which is what it did. It just was one of those kind of choppy kind of trends. But before it got to the high, if you catch it right there, that's it around what 2040 looks like, and you can ride that all the way up to 2049 or so before it touches. So that's a nice run. So if you can get that, you want to get it. And of course you got the trend line. Notice that short-term trend line working up through there. You can't, you got to pay attention to that too. And that's another reason there's no break of that yet. And you don't get a close outside. You might argue that there's a close outside there, but you get a sure one there. And then you get a first entry pullback and then a second entry. This is a double top, so you can count it either way. So I counted that as a new high, first entry pullback, second entry, and then you get that little higher low there that's like the little breakout pullback of this little channel. And so I like going long there too. And you're looking for prices to come back up here. And then guess what? You get a high pullback, first entry, pullback, second entry. Look at that nice bullish bar. Go long right there again. Off it goes. And then you finally touch the high side. Draw your channel working down. It's there. And that'll help you decide if you might want to just ride it back to the midline, or if you might ride it all the way back to here. And notice you get your break already here, and then it bounces off the midline. So that's a good reason to go long right there. I mean, there's clues to all this. You just have to learn how to recognize them. But you're pulling back, you get a first entry. This is just almost a perfect repeat pattern, because look, it pulled back, first entry, and then you get that one tick above that bar again that fails, just like it did right. Where was that? Somewhere we just talked about it. Well, anyway, I know we just talked about it. I can't be losing my mind. But you get that break, you get that one little tick higher and it pulls back. You you might have been tempted to go long right there, but we don't have a new low in place and we're not back to the midline. So just kind of wait and see what happens. You can always get back in if you need to when it does something a little different, but that one's a little too risky. And you do get your new low there and it bounces right off the midline. Notice how everything's closing above that EMA. It's amazing. It's just amazing how this stuff works. Just go long right there, and it still didn't take off. But you know that was your low point, and that's that one little. Notice that trend line across there, and you get that one little. You actually had that here too, but it was way too early. But you got your other reasons now, and you get that little break lower, and it almost closes on its very high. Nice chance to get long. I don't think I would have entered on this little pullback right here. If it would have made another lower low below one of these bars, a little break, and then turned up, you might have even added on or got in there. But since it couldn't go lower and it couldn't go higher, you're probably better off to sit and wait and see what happens and wait on the next entry. Um, but if you're already in here, then just hang with it. And you see, it never makes another tick below another bar, so you never, it was a little concerning when it doesn't go up because you think, well, maybe we're stuck in this range. But you got to remember the overall bias is up. So as long as you're buying and you're buying near the lows, you're probably better off. Uh, and so on it goes. And then it's coming back, and then you get another bounce right here. Um, Technically, this is a first entry, but look how bullish that bar is, and it goes higher than that. It closes on its high. You might have used a limit order when it broke higher, but I think I would have you want to go in with a stop. This is technically two legs back. On a smaller level, you'd see two clear legs, and then so this would be a second entry on a smaller level, and you still weren't back up to the top yet, and so off it. And notice how it came up a little short right there. That might have kept you out too, because normally you want to see it come off that line. So there's some reasons. I almost made this one green, but I just decided to leave it blue for the reasons that we just discussed. And actually, if you draw your little trend line, which I don't have it on here on this one, you get a close outside and then an attempt to go lower. It didn't actually tick that one tick lower, but I think people were, and this is also a breakout pullback from this channel here. Notice that. And you tried to go lower twice. So it's two legs back. It's just hard to see at this level, but off it goes. And guess where it finds resistance? This is where you'd want to exit, right in here. And of course, it goes another point or so higher, but you don't want to risk your money because it won't always do that. You got plenty by getting out right here at the line. And then it starts working lower. You got a channel working down. And again, here's that area I talked about. We don't have a break of that channel yet. But you got the low, you tried to go lower once, you tried to go lower twice, and so again, it's that little double test rule, and you get a nice bearish bar, and look, and everything, even though it ticked below the midline, everything closed on it. And so you could use a stop, or maybe even try a limit order there. You definitely don't want to chase it. But and like I said, these things rarely fail. It got just enough to get your scalp, and then it sells off. And it was tempting to go short right there because you figure now that we got the overshoot, and that's one of the clues that we may get a break now. Really thought we'd get a break here because we overshot it right here. But that just shows you what a strong market does. It can't break that trend line. Everybody's waiting on it to get back here, and they all can't wait any longer, and they buy, and it shoots off again. But again, it was tempting to go short there. I'm not going to mark it because this is too strong a trend, even though the price action rules tell us we're probably coming back to this trend line. So you get a first entry there. It's not quite at the trend line, but I could have this off just a hair or so. And if you backed out a little bit, it would probably look like it's touching it. So you might consider going long right there because that's a huge move down. And way away from the EMA in a market that's had it's a strong uptrend and there hadn't been any breaks of the trend line or anything yet. But generally, you want to wait on that second entry right here and just go long right above that and look at it go. And now you got a little trend line working up through here, and then it pulls back. Um, it broke lower first, and if it would have went out the high side all in that same bar, I would have said probably go long there because it's another double bounce off the trend line there. But I think you were better off to wait, and then you get the failed second entry short, so you can go long there. But again, it failed one more time, and it goes out the low side and then goes out the high side all in the same bar. I probably would have had a stop right there, or you could have dropped a limit order in there after it broke higher, and you see it. You could have got filled all the way back to here, and then it shoots off again. So there's a couple of different chances, and this is a failed second entry short, and this is just kind of like a breakout pull. This is kind of almost a repeat pattern of what happened when it came back right down here. It's almost the same thing again, and you'll hear me talk about that a lot. When you see those repeat patterns, they're generally going to do the same things they've done before. Um, it's just the way it works. If it worked one time, it's probably going to work again. So really, you might have considered entering in. I'm going to go ahead and mark this other one. I'm going to mark it green. So, and you see there's 4 entries there, just like we had earlier. And they're almost all the same 4 entries, right up through there. It doesn't go as high this time, but now by the time you get up here, another reason you want to be careful up in here is that you're getting so close to the highs of the day. This one's even getting pretty close, but by the time you get that many traps, you're probably going to make a new high at a minimum, even if it only just goes a few ticks and then reverses, which is kind of what happened here. And again, this pattern is almost a repeat of what happened right here, so it was really tempted to go short again. Figuring we're coming back to this line. And this time, notice how the amount we overshot it. We kind of overshot it down here about the same amount. But you get all these matching lows, and it pulls back, and you get your second entry long right there. It's the first break. You're going to get a new high most likely on a day like this. Just use a stop right there. Even though it looks like I wasn't here to watch it then, but it looks like it probably broke higher and then pulled back. Maybe it did. Maybe it just went up and down before it broke higher. But I probably wouldn't risk it anyway. I'd just put a stop there, and off it goes. And it's just following that little trend line. There's actually another little channel there. It's actually just following that channel up. And it was tempting to think about even going there, but you didn't get a tick lower or anything, so I think it's a little risky. And then you don't want to go long right here, right at where you found resistance across here a few times before. And it does go high enough that it would have got you another entry, but just wait. And I didn't mark anything after that. There's a second entry long here. Not a good one. Plus, the main thing is you've had your break of the trend channel and a new high now. And so you can expect a possible correction that's going to last about an hour or so before you might see any more the trend come back again. And if you look, this thing started correcting at 142 and it reversed at 246. So just about a perfect hour. And notice there's 2 legs down. There's actually 2 legs in the first leg, then a little 2-legged correction, and then another couple legs down. But it's really a 2-legged move on a little larger move, and that's what you're looking for. And now it's going the other way. And you'd want to draw your trend line up through here and stay with it as long as that trend line's good. So, of course, it's 3 o'clock. You don't want to be trading. You can see we hit the 3 o'clock hour. That's right when everybody generally starts exiting. A lot of brokers will kick you out automatically right at 3 o'clock, 5 or 10 minutes, 15 minutes before the close. So it'll get kind of funny like that a lot of times, people running for the door. But really good trading day. We'll back out so you can see it again. I mean, there's any number of good buys in there. And notice I don't have any shorts, even though there's some tempting ones. None of them are shorts. You just don't want to risk it on a day like today. So don't play around with it. Get your money and stay with the trend. And if you once you get your break here, you could have considered shorting in here, especially on a trap, and there were a couple of traps in there, so you could have gone short there. But again, I didn't mark any. It's too late in the day to be, especially to be counter trend trading. So there's just too big a chance it runs up for another leg. You know, a lot of times you get your break and you'll get two legs up to a new high, and we could make another leg here that makes a new high that's equal to this one. So that wouldn't surprise me at all. Even even though we only got 15 minutes to go, it could still happen. And that would give you a high of about what 2061 or so. Uh, but that's pretty much it for today. Really good trading day, like I said. Nice spiking channel, nice bullish day, and it's nice to see the market come back. And you just day before yesterday, I was talking about the market being down in 19. What did we get down to? What were the lows? 1980 something, I think. 1984, is that it? I believe that's it. And now, a couple of days later, we're 80 points, almost 80 points higher. So, I mean, that's what I was hinting about when I said, generally when you get those critical low, when you hit those sell-offs at critical um, support areas, you get these huge rallies. And so, be prepared for them. Be aware that they happen. And I didn't expect it was going to come that quickly. I knew we'd see it probably pretty, soon, but we're almost back up to, we're halfway back to 3,000 again in 2 days. So just really good trading, and but it's real predictable, and it's real, it's nothing surprising or nothing that you couldn't figure out was probably coming. So just keep that in mind, and next time when you see it, recognize it. But anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.